Hi, Warriors. Get ready for Whipsaw Wednesday. Hello, Patrick. How are you? Bran, Ryan, Mike,
Morning, Dale.
Sinatra, Laura, AJ. How are you? So, everybody, Ryan, how's it going?
Yeah, good mate. You
Good.
got the January blues yet?
No, I don't.
I did. I got the
You?
scales this
What?
morning.
Okay. Why? What are they?
You
I've.
know,
I.
when just after the holidays, the
Oh.
party's over, and I got on the scales this morning, so I've got the January blues.
Okay. Well, I had the blues before January, and now I feel great. So ready to go.
Happy
You know, you
days.
guys, you guys with big families, it's a little different. Late, you'll find out. Anyway, what lit up the commodity currencies today, Brian?
A bit of news from China this morning or overnight. Apparently, they're going to lift a partial ban on Aussie coal deliveries or imports. They
Huh.
gave dollar a nice little shot in the arm.
Okay. Yeah. Nice hold. You know, I've said it before. I'll say it again. It's great to make a nice call, but doesn't matter unless it's a trade. And
Yeah, thanks, mate.
better than a nice trade is a great hold, which you're very good at, Ryan.
Yeah,
So congrats on that. And you're buying the Aussie near the lows, so it's been a real nice trade. Hard, what do you say to yourself? Let's do a little mentoring here. What
yeah.
do you say to yourself, like, you had this big run and then you're just chopping around. And I know doubt probably creeps into your head, especially maybe after a move like this,
Yeah.
that maybe that's it for a while. What's your self-talk to keep you in a trade?
For this one, and funny enough, we were talking about this on the Flow Show this morning. Just to answer one of the guys in the room, Sarab. Yep, the Flow Show is back up and running today. It's the fact that we kept those higher lows. We took the leg up through 65 up to 66.
Held these
Um,
lows on the
yeah.
pullback.
So even
Okay.
though the trend still remains. If you're making higher highs and higher lows, it keeps me confident that we're still going in the right direction, even though it's a bit more sideways.
Okay.
But I've just looked at it not too long ago, and really needs to take out this 69 level. It's becoming a bit of a stick in the mud up here. I
Okay.
think if we take that out, there's a fib, 50 fib at 69.17. So if we clear 69, 69.20, then we could get a decent push up to at least 70, maybe 71. But yeah, the
Okay.
breaker is 66.60, and then that break point around 66, 65, 8-ish.
Yeah, because Canada, out of nowhere. I mean, it was a tough sell at the close yesterday, and then boom.
Yeah,
So 37, maybe we are going to just break in Canada now.
which is
Um,
surprising if you look at what oil's doing today. You
yeah,
think why is CAD gaining when oil's on the fritz?
yeah, yeah. Oil's really getting clobbered. Almost looks like new lows could come here. I mean, we're not that far away now.
Yeah,
This was just another bear market rally? Couldn't get even through the 50-day, and we're going to make a new low. Um, I took a short in silver at 24.30 with stops over at 65. And the
nice
reason
one.
for that is gold again printed new highs. And silver has always printed new highs with gold till today. Okay, so also, my New Year's resolution of not using correlations to make decisions. Um, it put in a pretty good day yesterday, this gold silver ratio. So
Yeah,
anyway, I think that there's a shot that we could be topping. It always takes longer than you think it's going to take, but then I think we could see Stel's buy zone in a hurry. So that's a target around the 22 level.
Nice
I
look.
don't know. I don't know what's going to cause it, and let's accept that when I look at Euro, was this really enough? Just one down day for a correction, or are we going to have, A, B, C? I still think that this 103.70 level could be tested. So, it's a smarter short now than when I was doing it last week. You have a
Yeah.
lower high, right, for the first time.
Yeah,
And
yeah, we've come through that sideways action we had all the way pretty much through December, haven't we?
yeah,
I still think this is perhaps a bit of a washout from what we saw yesterday with that big dollar
yeah,
buying that sent it all the way down lower. So we're pretty much back where we started in quite a few pairs.
EG looks vulnerable to me to about 87. And that's
Yeah,
why Euro's the preferred short if you're going to fade this stuff today.
yeah, I'd like to see it holding this 88 level, call it 88.90, maybe 87.80, that sort of area. Then we need to get a run on the upside. But again, it's a bit like the Aussie. It gets up there and it just struggles.
Yeah. Well, we had one of my derivation. We had 4 drives to a top.
Yeah,
1, 2, 3, 4. So you know how you get the 3 drives wrong is you start counting, but I would always count from the first confirmed high
yeah,
and look up here. I mean, this was pretty glaring. Anyway, we'll see. And S&Ps tried to recover. When I look at S&Ps, to me, this looks like, impulsive, corrective. And if we start breaking down under 3760, we could have pretty good washout. I know the VIX did not break out, tried to. We'll see if it pulls one of these. I don't think it's going to. And copper looks like it's rolled over. Pretty good break in the last couple days, and this is following through. Just trying to hold, squeeze between these moving averages.
yeah,
Down looks like the path of least resistance for me. And what was it? And dare I bring up Apple, which I talked about that these were hope lows at 140, that we could see 130, and then we couldn't get back above 130, and 115 was a target based on the weekly. There's these moving averages. I think we'll
yeah,
go there, maybe take them out. And then, if you really want to get bearish, you just measure this whole formation from here and this breakdown here at
yeah.
130. And that actually gets you, I have to go to monthly. It's going to give you
90, 92, 93,
eight,
something like that.
80, 85 around the pre-COVID high is a
Yeah,
measurement of that formation. I don't think we're going there right away, but 115 looks like it could be done, in a week or so.
yeah,
I'm not impressed by today's pop in the S&Ps. So as long as we're under 3,900, I think the pressure is to the downside. The only question I really have on the S&Ps is this: are we going to hold here, at the 200 week, or are we going to really flush? This would be the most bullish thing for it to do, would be for it to tag this return line. And we've already had a reversal week, these inside days. Yesterday, we took out the prior week's high and we're lower on the week. So if we take out last week's low, the candle by Friday will look pretty ugly. So let's get it over with. And I think, that's maybe the reason why silver could come off is if we have, some type of pretty good risk off. This would be a pretty big risk off move, wouldn't it? All the way down to
yeah.
33 and a half. I mean, you're talking 500 handles. So I don't think much will thrive in that environment. I'm interested to see what the dollar does. I think the bonds will thrive in that environment.
So,
So
so
Yeah,
doing a
yeah,
bit
I
of
know.
mentoring again. How do you assess those last 3 weekly candles? Because they look to me very low liquidity. I don't know if you can zoom it in a bit just to show people.
Yeah, yeah, they are. Holiday markets during December. Just a lot of noise, but I also don't think it looks like a low. It looks like consolidation after a hard break from the false breakout here.
Yeah.
So the way to do it now is this a double inside week. Well, this was the inside week. We took out last week's highs, and if we take out last week's lows, it's going to be a pretty ugly red candle. And I think didn't the Dixie have the same weekly setup inside? No, because we closed bad on Friday. Okay, so that's how you interpret it. It either means nothing to you, or
World.
it looks like or you believe this move, from the highs, and all we've done is move sideways. I don't think that's a bottom.
No.
Could rally to 39, but I don't know. That's not a bottoming pattern to me. That's like a pattern. Go ahead.
It looked clear where your break points are. If you go through 39, then we're looking at the upside. If you go through 37.50, 37.60, then you're looking at a decent downside move.
Yeah, I mean, if you want to call this a flag, I mean, it's starting to get kind of stretched to be a flag, but a measured move is going to take you down to that return line. Down here, a measured move would take you here. And what if it does that before the Fed? Anyway, I'm careful with this because I respect Jim Welch's opinion, and he's kind of constructive for this year. He thinks we'll see 4,200 in the S&Ps again. So if there's going to be a flush, it's I think going to happen before the inflation report next week. And we'll get a good number, and that might be a great buying opportunity. So we'll see where we are around that. Was it PPI next week or CPI or both?
Right. Yeah, I think so. I'm not that far ahead, mate. I'm struggling to get through this week.
Yeah, Dale, actually next week is CPI, and good morning, guys.
Good morning, man. What day is it, Blake? Wednesday?
Today is actually, it's funny. I set my watch yesterday and I set it to Monday.
Yeah.
And then I looked down yesterday afternoon. I'm like, that's Tuesday. Yeah. So I'm struggling just like the rest of you guys. So, and matter of fact, I missed a little bit earlier, but I wanted to ask Ryan and Dale, I'm going to take over really quick because I've got a few things that I wanted to show you guys. But I was actually short the Aussie overnight, and I woke up this morning with the Aussie trading up in my face, and we're up. I was like, why are we up 2% today? And so explain to us, Ryan, what we, us as North American traders, we wake up to, the Aussie that was trading much lower. We started bouncing in the evening, and I mean, when I was with my family and whatnot, we were bouncing a little bit, but what made us push higher towards these range highs?
Well, it was the coal story overnight, as mentioned earlier. There's been, for the last year or so, there's been a bit of a trade spat between Aussie and China, and so China put in some bans of this, import bans on this, that, and the other. And so it's a rumored story at the moment, but it got the ball rolling, and then we've seen further dollar weakness across the board. So it's been a bit of a double wind. I mean, Chuck Vincent in the Q&A said pretty much the same thing. But what's your opinion on fading moves and rumors like this? And I think it's twofold. We have seen some easing of tensions with China, so it's not necessarily something I'd fade. But if, as we've seen, Aussie dollars moved up to the key resistance area into that 69 handle, if it can't get through, then if you want to short it, that's your area. Because if dollar weakness and Aussie strength can't get through a big level like that, well, there's only one other way it can go. How far it goes down is another question. But if you want to try and nick a few pips on a fade, that's what you want to do. Look at those sort of areas.
I wanted to address Chuck's question because for me, I feel exactly the same way. The rhetoric has actually toned down between China and Australia, so this shouldn't be too big of a like, oh well, wow, I wasn't expecting that. I think most people should be expecting it. But if you're going to fade it and you want to take the dollar out of the equation, I think the better trade out there, and it's something that I just bought today, would be the Euro Aussie. And the reason why is because you get the dollar out of the equation. You can see the Euro Aussie is at a big pivotal level. I mean, this is, I'll just draw it out for you guys so you guys can see it. Key pivotal levels in the Euro Aussie right here. And if you want to just, like I said, get rid of the dollar, because we have so much risk as far as non-farm payrolls. We got ISM today. We got all this jobs data, which, by the way, the jobs data is going to be probably the most important stuff for us to be watching here in the US this week, and probably moving forward, is we're going to be watching the jobs picture. Just removing that out of the equation and finding a currency like this, like the Euro Aussie, which the from here, if the dollar does move lower or it does move higher, it's probably going to move in tandem and might even actually favor the euro from here, after we've already seen the move in the Aussie. So that's why I actually picked up the Euro Aussie here. You can see it right at support, channel support, 78% retracement at this last move up, and it's revisiting the scene of the crime. So that's why I'm like, well, I'll just buy that here instead of trying to fade the Aussie US dollar, which I know, most people are like, well, let's just fade the Aussie dollar, right? So what are your thoughts on trading a cross rate?
Yeah, you make it absolutely right. If you want to take out the US dollar exposure, you look at the crosses. You could look at Aussie Kiwi as you're doing now.
Yep.
That's already had a big move as well, but we're up close to resistance up here as well. So that's a potential fade level. But then you've got other pairs. If you look at Aussie yen, we know that being short yen is perhaps the hardest way to go at the moment, or the path of most resistance. So you might find that something like Aussie yen is going to go a bit sideways amid what's happening in the yen and what's happening in the Aussie. But you get a big level in that Euro Aussie, and you got big levels, you trade them, don't you?
Yeah. I mean, look, we are at 38% resistance of the Aussie Kiwi. I mean, right here, 38% retracement. So if you want to fade the Aussie, I think, going into the North American trade, which we are, if you want to remove the dollar out of the equation, try going there. So anyway, speaking of North America, and Dale, you were talking about precious metals, what was happening in precious metals. Silver's still in this ascending wedge that Steve brought up, I think, last week. I wasn't even looking at this wedge, but he brought this up, and we're still confined by it. But look at the gold market. Gold surged higher, exceeded the 161% extension here, channel resistance. Also, this is a 50% retracement, longer term 50% retracement, but relative strength is very divergent here. I mean, look on the daily charts. This is the RSI, and you can see we're very divergent. We got a bit of a throw over this morning. Do you trust this move higher in gold?
Well, I'm more bearish silver.
Okay.
I think they'll both go, but silver, the gold silver ratio is saying that my preferred short should be silver. And like you said, gold printed a new high today. Silver did not.
Yeah.
The RSI structure is even weaker than silver.
Okay. Well, I think you're right. I think you can target probably either or at this stage in the game. One of the other things I wanted to,
your red box.
What's that?
Your red box is the target.
That's your target. Yeah, I think that's doable. And actually, I would probably target somewhere around here.
That's my target too.
No one actually asked you,
target.
Stelios. No one actually said, "Hey,
No,
Stelios,
what's your
I
stole it from him.
What I want to add is that so many people talking about 2023 being the year for metals, and we've had successive successive days of rallying, and they're outperforming, and still we haven't broken out. That's I am very bullish to metals. You know that I'm very bullish, but this price action is not convincing yet. And what's going to happen when we do get risk off, or when metals start underperforming. So that's why I think that zone in silver is probably going to get hit. Now, of course, it might not. I still have half my long position, which is doing very well. But I think low 22s we're going to retest, and that's where I get back in.
Yeah. It's interesting. As you say that, I mean, I interviewed so many people at the end of last year on Trader Summit. Like all of my interviews on Trader Summit, everybody's bullish gold. I mean, there isn't one person that's like, nah, I'm not bullish gold.
Jim Welch isn't.
Like, everybody's bullish precious metals, and it's like,
they are right. They are right, but we got to move lower first. That's what I think.
Well, yeah, it does make you nervous more on the short term, right?
Yes.
That there's some risk out there. All right. Well, good morning, Stelios. What do you make of this move out of China and Australia and everything that's happened overnight? And by the way, I don't know if you guys saw. I mean, I know you guys saw this, but here, let me get over to ForexAnalytix. Dude, this is what kind of worries me. Wednesday, did you see the French CPI data?
Yep.
That's not inflationary.
No, and we're seeing it everywhere. Swiss CPI came in lower as well. Okay, it's much lower levels.
Germany yesterday.
Germany,
yeah. Germany, but there's a bit of a skew with the German inflation yesterday because it might be due to the gas payments that the government made to some households, so they're expecting that to maybe reverse in January. But the PMI all suggested lower price inputs as well. So, it is easy, but how much it eases is another question.
Yeah, I mean, but regardless, I think this is the news. This is like some of the data we have to really be paying attention to. Overall, inflation is coming lower and it's coming down. I mean, I think the real question is going to be next week, for US CPI. But when you see, inflationary pressures really ease, worldwide, I think, and then you got China, adding to that. So, it's going to be really interesting. But what do you guys make of all this data that we got?
Well, I think inflation-wise, somebody was saying for a while, months ago, you look, first quarter 20. Oh, wait, it was me. Yeah. First quarter 2023, I think we're going to see big prints lower. And look, last prints in Germany and where was it else? I can't remember. One of the other prints was like a full percentage point lower. So I think we're going to keep seeing that. I think inflation is, especially in the US, okay, the European inflation, I think is going to struggle to drop as much because of energy, because of many factors. But it's I think the US year-on-year change is going to drop quite quickly, and but then again, I think we're going to then stabilize and start rising again. But I think people underestimate how quickly this year-on-year rate of change of inflation can drop before it starts rising again. But yeah, China, for me, the fact that China are going to be reopening, yes, we're getting more COVID cases, etc. But look at how things have progressed in the US and Europe. We see now here in Greece, for example, we still get loads of COVID cases. None of them are serious. You get the other kind of flu, H1N1 and all the others. And there's people I talk to, it's a lot more difficult than COVID. So COVID slowly is going to become irrelevant. It's still going to be there, but it's going to become irrelevant because it's going to be a lot easier to go through, right? It's going to be a lot less dangerous. And I think China opening up sets the scene for that end game, which they haven't done it yet. So I think this is inflationary, definitely, for the fact that China is reopening, for commodities, for commodity currencies. But first, there's going to be, these scary numbers coming out. But then, the virus does its the cycle, and then it becomes less and less dangerous, so less and less relevant, and then we just treat it as part of life, like we have here. So
all right, well,
yeah.
well, I mean, I look at like my sister's poor family over the last month, and the reason why I didn't hang out over the Christmas holiday with them is they had H1N1. They had COVID. They had there was another virus that they had.
RSV.
No, they didn't have RSV. Not like you, Dale, but that everybody else around here seems like they have. Anyway, yeah, it's just everything going around. All right, well, Stel, I think you make a great point as far as how China is going to react over the coming months. But it'll be interesting though to see, if China does change its tune a little bit once all of the population gets hit heavily. But let's look at the S&P here. We have ISM data today. We have we had yesterday stocks rallying towards 3,900. We got slammed back down. We're still below 3,900. Dale, you were just talking about Jim Welsh, how he's more constructive near term. I think we have to see this 3,900 break in the S&P. To be honest, I don't think that we're going to break ahead of the jobs report this week. But what do you guys think here? I mean, we have, and by the way, I just want to show you how critical the support is here in the SPOOs. Right here, this is the horizontal support near the 161% extension of that last, false breakout higher. It's a 161% extension, 618 of this entire move. All comes down here. So I believe that any move down to 3750 is going to be really critical support for the bulls. But that really puts us kind of trapped in this 150 point range. What's going to break us out of there? I mean, what do you think, Ryan?
Yeah, I think you're right. I think the jobs it could be a swinger because it's we could have a move today with the ISM depending on how that does. It's down to how the data again, watching the data and seeing. But what will be interesting is how it moves. As I said, I think we might be seeing a redefinition of risk on, risk off. So if the data's good and stocks rally, that's going to tell us one story, whether it can get up to 39 or not. Conversely, if it's bad data and they rally, then we know we're in the old guard sort of thing. But it could. This week could be defining. If we finish the week above or below, above 39 or below, 37 and a quarter, 37, I think that's going to set the mood.
All right, Dale, do you have any opinions here about about equities? I mean, I think you said you're thinking they're more constructive. You'd be a bull here.
No, I'm looking for a washout into the inflation numbers next week. I still see lower numbers in Apple. Until Apple stabilizes, I can't get constructive.
Yeah, Apple looks like
I'm
crap.
bearish. Remember,
Apple
I was talking about it at 140.
Then
it was a short.
Look at Tesla afterwards.
Yeah. Tesla's further along, but Apple's a much bigger part of the indexes.
Yeah, I mean,
market cap.
And you think about it pre-market. I mean, it's up this morning pre-market, but it's still in breakdown territory. So that's you got to be thinking about that if you're trying to play like equities on the long side. Dale, I think you bring up a great
It was the
point there. No one
Yeah.
cares about Elon Musk and no one cares about Tesla. So only Stelios cares. So just kidding.
Elon Musk cares about Elon Musk.
We are at the 70% retracement, and I think Steve, the last time he was here, he said he would be a buyer at 60, which I think that would be a really nice place to be on the long side.
See, my issue with Tesla valuation is that it never reflected the car company. It was always about, what Tesla is going to do next. It's not a car company, it's a tech company. That's what they used to say. Well, now it's becoming a car company, and car-wise, it still has a tiny percentage of cars worldwide. The end.
Dude, not in Scottsdale, Arizona. I'll tell you, it's got.
I know, but you live in a little paradise world there. Go to other big countries and also big parts of other countries.
Go to Chandler, Blake.
Yeah, Chandler. It's all about the Honda Civic over there. So not so much the Tesla. But you make a great point, Stel, and I think it has been viewed as a technology company, and now if it's going to be viewed as a car company, it's probably not worth what it's about where it's at right now. That would be a thing. Hey, one last thing I want to bring up. I know you're going to bring in Adam Button from Forex Live. I just want to let you guys know that if you guys haven't checked out the trader funding program, you should. I actually just passed my own assessment yesterday. It took me like 2.5 months. My wife had a major surgery last month, and then we also had the holiday, so it took me a little bit longer than I thought it was going to take, but I completed. I'm actually going to put together a video, and I'm not going to tell you that my way is the right way. My way is the grinding way, and I'm going to actually post all the trades, and I'm going to put together a video and tell you how I did it. So if you guys want to check out the trader funding program,
nice work, Blake.
Yeah, thanks. You guys should do it. And like I said, I passed yesterday. It took a little bit longer. But I think, and plus you have to imagine, I also do other things other than do an assessment. I, trade my own money. I'm the CEO of ForexAnalytix. I do interviews with Trader Summit. So there's a lot of things that I actually do other than just trade an assessment account. But I did that just to, do it and tell you guys how I did it. So I'm going to put together that video over the next week or two. So just you guys will know it is coming. So anyway, I'm going to let you take over. I want to say, it's nice to have the whole team back. It's nice that the flow show is going. Ryan Stelios, I know K-Man had to step out, but he's there, and it's nice to have everybody back and getting in the trader driving seat once again. So I'll see the rest of you ForexAnalytix folks. I'll see you on the morning edge in about 45 minutes. And Dale, it's yours.
Thank you, team.
Cheers,
Adam
mate.
Button,
Thanks, everybody.
Yeah, Stel, thank you, and Brian, thank you, buddy, and thank you, Adam, for being here just after New Year's. Happy New Year to you, buddy.
Happy New Year to you too, and the whole team there.
So, Adam, you want to share your screen? I think Blake is still sharing.
I just share.
Sometime.
Tell me about it.
Oh,
I got the video
okay.
on here.
All right. Well, then
Share
I'll bring the charts up so we could talk. You don't want to see me this morning. I guarantee that.
It's early out there.
So, yeah. So what's top of mind for you, Adam, coming into the new year? We started off with a stronger dollar. Things like Apple are getting wrecked with Tesla. A lot of pressure on risk yesterday. Crude's giving up the ghost in the last week. A lot of pressure on different markets. Where are the opportunities?
Yeah, you wonder early in the year always and late in the year whether it's flows or fundamentals or if the market's really reacting to something, or it's yesterday maybe need for dollar liquidity, today things reasserting themselves. Oil, there was a lot of speculative money in the CFTC data just in the week before Christmas, so I think maybe that kind of popped it up, and now it's giving it all back, although maybe a little bit more. I'm on a momentum trade to the downside. Seasonal is very good for the dollar and the yen this month. And then I guess the news early in the week was a report from Nikkei that Japan's probably going to raise, the Bank of Japan, its inflation outlook on the 17th, I think, of January, and they'll put it up at 2% for 2024, which would argue for a normalization of policy. And it's that I think is a fundamental difference. The rest of it, I think it's just in the ebb and flow. Yeah, you guys talked about Tesla. That's giving it all up. But that, I don't know if it's a macro story. I think that's a Tesla story, as much as Elon Musk would make it a macro story.
It's a Twitter story.
A Twitter story. I mean, Apple, though, is also coming off. And that's the one that's got me a little bit more worried. I'm kind of on the macro side because not that much has changed with Apple. The usual there's that line, right? And it's cracked those June lows.
Yeah.
And there isn't a lot there below that. I mean,
There you go. So I mean, this whole formation measures $80 back to the pre-COVID high.
So
but
82, I was looking at it yesterday. That's when Warren was buying. It was around, $10 EV to EBITDA. And that would be, it's like another 35%. And we get you back to kind of when Warren Buffett was buying with 2015, 2018 kind of range.
yeah, that was
and
a
even you can argue
pre-COVID high.
then, you had sort of more embedded growth. You had a kind of higher growth profile. Obviously, he saw it. Who knows what the future has for Apple, but
You think there could be a China factor in Apple as far as manufacturing or demand or something, that everyone's interpreting the reopening of China as being bullish, everything commodities. And so why is crude breaking? And is it really bullish? Or are we in a worse situation because when they had a lockdown, people still could go to work? And
right.
if everyone's getting sick, how do they work?
Yeah, I mean, I just think the market will look through that. You're right that it could really throw things off in Q1. Those subway numbers were out yesterday. I thought that was pretty encouraging that it was up. There was an uptick in the dozen biggest cities.
Oh, that's a good stat. I never thought of that.
Subway, so they kind of passed the peak already. Yeah, obviously, we had the China PMI was out yesterday. It was terrible, but I don't really take a signal from that. But you're right. The market isn't. Crude would have been one. Although you see stuff like iron ore is ticking up, copper's held up. We've talked about that before. So I think that's kind of where my eye is. And I think China in general, like what was Alibaba up 7% yesterday? I think we talked about that last month was one that.
Yeah, the Chinese stocks are really the exception to the rule.
And if I talk about, my 2023 outlook, there's a lot of uncertainty out there, but I think China is the simple trade. It's, China is the US in June 2020 right now. It's reopening, the government's spending, and they didn't spend really during the pandemic in the same way that other countries it was the greatest fiscal expansion in history. But China's kind of kicking that off as they reopen, which is a bit of a different playbook, but it's bullish.
There's Baba.
Yeah, I don't know what that pre-market line is, but I think it was up 7% overnight at one point.
There's a daily. So I mean,
so it's 98 there now up to.
Okay.
A nice. Yeah. So it's breaking out here again, and that it was trading at like 4 times earnings at the bottom there, and like that company has not a lot of debt, so it was still stupid cheap. And a lot of China. I mean, I don't know much about Alibaba, their business. But the whole Chinese market, I think, is just the simple trade, and it's the yuan too should strengthen along with that. But anything really touching China, I think, is probably 2023. I don't think really needs to be any more complicated than that, because there are a lot of downside risks for tech, North America. Europe has its problems, just global growth in general. But China's cheap, it's reopening. And it's reopening fast.
I bring up a topic that we hardly ever talk about, this emerging market currencies. I talked to Tavi Costa a week or so ago, and he never talks currencies, but he's very bullish Brazil, Adam, and he liked these pairs, the real against the yen and the real against the yuan.
Next time I come on, I'll bring my own charts. But it was an interesting one yesterday. It was a Deutsche Bank chart I had up, and it was all global markets, right? And the Bovespa in Brazil was really the best market in the world last year. And it's not just, politics kind of changed there. And I suppose a lot of people like that, but it was commodities, right? It's commodity currency.
Producer.
Right. And
everything, mining, grains, everything.
And so there's a lot to like. And I mean, we were in 2000, that kind of era, everything touching Brazil, really had a nice run there. All of Latin America. I'm a bull right from Mexico all the way down to Argentina. And there's not it's really the same story in almost all of them, and it's
El
commodities.
Salvador, their Bitcoin economy. Are you constructive on that?
Well, what's the trade on that? No.
I just thought I'd bring it up.
But I like Mexico a lot. I think we've talked about that, but Brazil, exact same story. Really, bigger economy. I think that Mexico benefits from that kind of friendshoring, they're calling it. They will be building a lot of factories, and you mentioned Tesla again. I'm not a bull on Tesla, but they're going to announce any day, or might have been announced today, a gigafactory in Monterrey, Mexico, which that city looks like it's going to be kind of the heart of the Mexican, hopefully, industrial renaissance.
A lot of American expats used to go down there to retire, and now it's getting industrialized.
Well, right? I have long said that Acapulco real estate is going to be a great investment. One day the violence will end in Mexico, and that is it's been a bloodbath right around
when second coming. Anyway, let's get a little bit more just macro on the dollar. Where's your head at, Adam, after this big break in the dollar here? Is it due for an interruption here and some type of bear market rally if it is a bear market?
Seasonally, January, second best month for the dollar.
Okay.
And so obviously after a good start, although it gave most of it back.
Yeah, it gave a lot of it back.
So the way I see 2023 is that the U.S. consumer is going to hold up better than expected.
Okay.
And I think that's my call. And not only that, but better relatively than global consumers. And the number one reason why is the structure of the U.S. mortgage market. The 30-year fixed is like a superpower for Americans.
Yeah, they're all in at 3.
If you bought anytime 2021 or earlier, you're at 3. And I think a lot of people still haven't even benefited from that. Like, that's almost stimulus in the pipeline for the U.S. because, those people haven't been able to travel as much as they want. And they went from having it might have been a $1,300 a month payment to maybe $1,000. Like, some people refinanced in a really good way there. And that is just money in the pocket every month. Now, I know a lot of that's been eroded by inflation, but it's cushioned it. Whereas you have in the rest of the world, Canada, for instance.
Like Canada. Yeah.
Australia, Canada, Australia, the UK would be the 3 that would be hurting the most, New Zealand as well. You have that same inflation, but you have mortgage rates going up, tremendously. And people 40% on variables, the rest on 5-year rolling fixed. So 20% of the remainder rolling every year. You hear people's payments are going up $1,000, $2,000 a month. And that's just going to obliterate discretionary spending in the rest of the world. Whereas the American, the typical American, how much are they really hurting from higher rates? Even if you have a car payment, it's fixed. If you have, a line of credit, sure. But
they're walking away from cars here, Adam. Because
I know I'm worried about cars. I really am.
Because they have $1,200 car payments. Because during the pandemic, I think auto dealers were doing like 7-year loans, and the financing was ridiculous, and people felt they were making money on their home. It was still an ATM. They had revenue coming in, but they're walking away from them because their car payments are more than their mortgage, as you were saying.
Yeah. And I don't I could see that, and I could still see spending holding up, in a scenario like that, better at least than Australia, Canada, UK, a few other
relatively
markets.
Better. Okay.
The American consumer, never underestimate the power of the American consumer. And I think that's going to be that as long, the way the Fed really impacts the consumer is via the jobs market, right? They have to have at least some employment uncertainty to cut down on spending. Otherwise, the spending will continue in America. And I think that is going to be the American consumer holding up so well in the first half that the Fed has to start thinking about either hiking again, or the rest of the world weakens so much that the U.S. Has a better inflationary picture. And part of that might be dollar strength.
Okay, interesting. So then, we're going to test the theory on Friday. You have any feeling for what the numbers are going to be.
Well, and I think-
especially wages. Wages are real sticky lately.
Well, that's where that's going to be the spot to watch. The initial jobless claims, non-farm payrolls, and I just don't think the claims numbers are anywhere to worry about yet. And so there's variance in non-farm payrolls. I think it's probably been overstated for the last 6 months. If you look at the household surveys being weak, so we might get a couple weak dollar prints. Again, that's just going to make for that very rocky picture in the market. You know, you have a lot of people pricing in a brutal recession or talking about it anyway, and then others pricing in sticky high inflation. And I think the Fed's trying to be in the middle here, where they're threading the needle. But you know, there's these two camps, and I think it ends up being sticky high inflation on a solid economy, but it's not going to be a pretty picture, pretty path to get there. And you know, if we get a zero employment print this month, then we'll see a lot of dollars selling. It's one data point to another.
Okay, so that's going to be a market mover on Friday. What's going on? You know, I think today might be decisive in the loonie. You know, we got back up to this 37 level, and it looked good until today. What pulled the plug on it, especially with oil sharply lower and everything? This is a pretty negative day in Canada.
Yeah, I wouldn't. Yeah, it is. That's a surprising one to me, given what, like you said, oil.
Yeah.
You know, the inflation numbers have been hot in Canada, but I don't see any kind of justification for that. Again, it comes back to that. Okay, it's the start of the year. Is there some kind of CAD flow that needs to happen today? I don't know, some M&A happening out there, some deal, something like that, because I mean, it's all over the place today. I mean, the dollar is getting sold. So Aussie, you know, Aussie's up double what CAD is.
Yeah, just on some China coal deal that they're going to start taking coal or something.
I mean, so, you know, I'm just a lot skeptical of some of these market moves we're seeing today, that I should be reading too much into them or into the charts, even something like Apple cracking. I don't know why you would be selling on the first day of the year in Apple. I mean, that tax loss selling is over, but I you know, it's too, I'm not trying to take signs from the price action this early on, at least until we get to see the market react to some data and get through non-farm payrolls. But yeah, like you said, that's a surprise move in CAD right here. You know, there's nothing. I mean, oil's down $5 in 2 days. That's
yeah. So maybe it's not just about not paying attention to action between Christmas and New Year's, but even a full week after, because part of the world is still on holiday, right?
Yeah, and they moved, you know, the US tax loss selling deadline now was on the 30th. So you had a lot of machinations around that. Now you have kind of money rotation. Well, I'm not sure what, you know, that you can never really front run those kind of rotation trades. You know, you have this feedback coming from bonds. We're very strong to start the year. You know, super strong again on bonds today. So, you know, I could see the argument why people are buying bonds, the uncertainty and yields just really coming down the US and Germany today. So again, that I think is, you know, you get these intermarket correlations, right? And people rely on them, but I wouldn't rely on them at this time of year.
Yeah, that was my New Year's resolution that I broke yesterday during F.A.C.E. I said, I'm never going to make a trade based on a correlation, and treat each instrument like it's its own individual entity. And then Ryan busted me because 30 seconds later, I started talking about the gold silver ratio, and that's why I was a little more negative silver. So, you know, old habits
yeah,
are hard to break.
There is the time and place for it. And I'm a big correlation guy, but I just think, you know, I wouldn't put too much weight into it right now. And so,
okay. How about crypto this year, Adam?
Yeah,
I mean, you know, we had a, you know, nuclear winter.
Somebody got crypto on dollar CAD. Yeah, it's not looking great. You know, I'm struggling to find any enthusiasm.
Yeah.
And I think you know, price
not
action
much to
could create
talk about.
enthusiasm. It has held up okay, considering. You know, we're gonna have this guy on trial now in October, so that's headlines. What's the catalyst? Maybe the Fed turns, maybe the market turns, but I don't really see any kind of a catalyst.
Okay.
Copper, you've got see it up on your screen there. If you look at
Yeah,
the copper,
you're very bullish, copper.
it has had, the copper miners had a strong start to the year. It's a long-term, the commodity I don't love as much as, I don't know if you can pull up CopX, which is the miners, but they go up even on bad days.
Like the oils did last year.
Yeah.
So
and
even when copper's down, the copper shares
right
are
above
going
VABA
up.
there. And it's just been, I think that's going to be the spot to be. No new mines are coming online. I see that question. I mean, there are the ones that are in the pipeline for 2023 are there. You've got a few big ones in Indonesia and Chile, but the long-term picture for copper, it's just getting tighter and tighter. And it maybe even be tighter this year. So that's kind of coiling up. I mean, if you think about a weaker global growth, it's not there.
I'd buy a break here.
Yeah, I mean, listen, I'm not saying now is exactly the time, but it's the spot I'm watching. Maybe it cracks lower or first before it goes up, but it's pretty convincing bottom last year.
Yeah. So here's my preferred narrative.
China's open.
Tell me what you think. We get this washout in stocks. That pressures even things like copper, and things that hold their October low, should that washout occur, are your buying opportunities. So have your list ready if we get the washout. Everything is all one market, right? So we'll have pressure in everything, I think.
I see the argument because you're going to have the Fed come out, I think, every day between now and the end of February and say, hey, we are going to get to 5.25% or above 5%. And the market is trying to say you're not, but like that headline is just pounding you on the negative side, especially there are some even more hawkish Fed members out there. Again, it will come back to the data. We'll see. German inflation was a little low yesterday, but still at 9%. So
France came in lower. The guys pointed out today, France's inflation lower.
And I mean, you see the commodity prices coming down and energy in Europe coming down. I mean, the weather trade in Europe has been sensational. They're breaking all kinds of records this January for heat at just the time when they needed it. It's remarkable. Stroke of good luck for all of Europe, because I saw one, some of these records are like 6 degrees Celsius above the old record, 20 degrees, which is, I don't know, like 80, 75, 80.
Wow.
In
Stel
Poland
was
and Czechia.
bragging about Greece and Spain, and they're all look at natural gas, the widowmaker.
Yeah. Well,
I wonder how many. I wonder how many guys died being long net gas here.
Hopefully they took the holidays off.
Now they have widows. So my phone number is 7. I can manage your money anyway. So what do you want to wrap it with?
Well, I mean, I'd like it on the FX side. I think Aussie CAD are very vulnerable on the housing. I think we are headed for another round of pain in those housing markets now. It was on the fence. You listen to mortgage brokers now. It's not a good scenario. People are trying to find a way to stay in their houses. But we're talking $1 million houses they're $2 million houses that don't look like $2 million houses that have, $1.5 million in a mortgage.
What are they really worth in a bad market if they don't go to foreclosure? 500 grand?
Well, that's going to be the question that gets answered, and it's a tight rental market still. So I don't know how it ends up, but like that payment on $1.5 million mortgage, it's $1,000 every percentage point, and we're talking 3 percentage points, just or 1,500 every percentage point. So people are just getting smoked on the resets. Europe's still a weather trade. And the U.S. consumer holds up, and then it's just data trading. I mean, we saw it in the last couple of months, massive moves on every data point. And I think you just got to be really dialed in when the data is coming out, the intricacies of the data, which data points matter this month, and what
Fed minutes matter today, Adam.
Yeah, I don't know. I mean, the minutes, I think they could.
Maybe for a minute. the minutes for a
Yeah,
minute?
maybe. I mean, again, it's going to be that idea. Yes, we're going to have to hike more. Yes, that inflation has been more sticky. Yes, service sector inflation that Powell was talking about. I can't imagine it says anything other than the hawkish message that the Fed delivered. But the market might latch onto something a little less hawkish. So, but I would be worried about that. And then yeah, we'll just watch China reopen and we'll go from there. Did I miss any questions in the chat? I hate to miss a question.
Let me see. Oz has surged on rumors of China coal. What's your opinion on fading moves and rumors like this, like the Aussie move?
Rumors of China coal deal?
Yeah, rumors of China coal trade ban lifting. That's what people are attributing to Aussie strength.
I mean, China, I mean, it makes sense to spread the rumor right now. I mean, that you got to trade rumors if you're trading China. I mean, the rumors of reopening were founded. 2.1% is a lot on even that move. I know it was material in Australia, but they need the supply. And I guess they're just going to walk it back in China.
Yeah.
I mean, it's funny how they're making up policy as they go in China, right? You think of China, first of all, you think of China as like long-term strategic planners. Right. And then you think, well, at least they're decently organized. And then now with COVID, they just kind of threw the doors open. And now with this, if they do fold on Australia, they kind of played tough for, I don't know, a year and then just gave up.
Yeah, the emperor has no clothes.
Well, I mean, everybody faces the pressure to keep the party going.
Well, Adam, you're a great trader, and you really have your finger on the pulse of things. So I know most people here know they could find you at Forex Live, but what section of Forex Live, say I just wanted to catch your content on the site, where should I go?
Yeah, it's just, you follow my name. If you click my name there, you can get the Adam Button articles. If you're our tags are really well organized right now. If you're trading some certain currency, we've got a lot there. We've got an education section as well. It's all free. So, or you can follow me at FX_button and on Twitter but mostly at Forex Live. You're going to get a lot of news fast. And I think news fast right now, and incisive analysis on what it means quickly is the trade in 2023.
All right. Well, Adam, you know that I'm a fan and root for you and your company, and hope that 2023 is one of your best years ever in all ways.
Yeah, well, we're coming off a good one in 2022. Stayed on the energy trade there and avoided a lot of the pain. So caught a nice year, and we'll try and steer in that direction again. Gold. We didn't even mention gold, Dale. We're both precious metals bulls. We didn't even get to talk about it, but
I'm short silver right now, Adam. So here's your buy point: 22 to 21.
All right.
Start buying.
I'm a gold bull. I'm a gold bull. I'm a gold miner bull. And,
all right. So forget the silver. I don't know. It just keeps marching along. Newmont looks great, but it's diverging. Here's Newmont. The gold miners look much better, but then you look at GDX, it's running into some resistance. I think there'll be a break. Again, if the S&P washes out, they'll take the miners down, they'll take copper down, and just have your shopping list ready for that event.
Yeah, I like it. Because, man, you see some of this, if tech keeps cracking, we'll see some opportunities.
Yeah.
No correlations, coach. All right. I saw someone, if I don't know about the Twitter you had. You can email me at adam.button@forexlive.com. I'll take care of that for you. But great talking with you, Dale.
Yeah, you too, buddy. Happy New Year, Adam.
Yes. Good luck.
Adam Button, everybody. One of the best traders on the planet. I don't know about any other planets, but this planet, I know he's one of the best. So
that's a good day.
All right, take it easy, everyone, and thank you again, Adam. And you could join the team in 17 minutes on the Morning Edge. Thank you, everyone. Don't just count your gold bullion coins and silver coins, and count your blessings. See you guys tomorrow.